Well, as we head into July, we're starting to see a little bit of a shift. Mortgage rates have dropped a little bit, and we're seeing a little increase on the home buying side, people applying for a mortgage. So, what is Bill Litton watching in July? We'll tell you next. Welcome into the Smart Mortgage Show. I'm Ben George with Bill Litton at Cross Country Mortgage. Bill, good to see you as we're middle of the dog days of the summer. How you holding up?
Holding up great. In this area, anybody listening in southeastern Pennsylvania or northern Delaware, there's been a lot of rain. It seems to rain almost every day. But we've got some heat, which is nice. I love the heat. And hopefully we're just moving towards some better weather.
Yeah, it has been hot where I am. And it's been, I think, routinely you're seeing over 100 degrees heat index, so it hadn't been fun, but hopefully the fall will be here. We don't want to rush the summer, right? So let's get into what's happening right now because, as July is coming in, I know you have a couple things on your mind. I want to start with the headline I saw before we hopped on. I thought it was interesting from CNBC that homebuyers are finally responding a little bit after the mortgage rates hit their lowest level in 3 months. And a couple of numbers for you, Bill. So applications for refinancing on a home loan rose 9% for the week and were 56% higher than the same week a year ago. And then mortgage applications to purchase a home rose 9% as well and were 25% higher than the same week a year ago. So now the rates have crept down a little bit, or more people are getting comfortable. We're starting to see, and I'm sure you are, more and more people applying for a loan and looking to actually repurchase or refinance.
Yeah, so we've seen a little bit of relief in interest rates creeping down the last few weeks. Now, I will tell you, as of the recording of this podcast, this episode, rates have ticked back up a little bit. But I think in general, we are seeing, at least in our area, we're seeing also more inventory. Not every house is a multiple offer situation. They're not all being bid up $100,000 over the asking price. So that's good. That's a good thing because with more inventory, there are now more sellers. And hopefully that's going to cool off the housing price increases. But as far as mortgage applications are concerned, yes, good indication. Rates have come down a bit, which is allowing some people to refinance. And we see more buyers in the market, I think, because there's more inventory.
Yeah, I was curious what you've been hearing from people. Has it been, hey, we're more comfortable with the rates where they are because they've been this way for a few years, we're ready to actually take the move? Is it because there is more inventory out there? Or is it because, I know Delaware Valley's been still pretty strong in terms of home prices, but we're starting to see them level off and, some areas start to pull back a little bit?
Well, I think it's all of those things that you've mentioned. Usually it's not one thing, it's multiple things. But I think that one of the things that you just mentioned too is there were people that in 2022, as rates started to climb, said, well, I'll wait until the rates come back down. Well, now we're 3 years in. 3 years can feel like a long time if you're putting off a move. So I think a lot of those people are saying, you know what, I've held off long enough. This is the new rate environment. I'm just going to have to bite the bullet. And there's enough pressure in those situations where people either have to move or there's enough reasons for them now to take that rate from 3% to, upper sixes.
All right, very good. So what else then have you been watching over the last month? And, here as we're kind of looking ahead towards the second half of the summer.
So the big news and the big thing to watch is certainly still the tariffs and how that impact of tariffs might cause inflation to tick back up. Nobody knows for sure exactly what's going to happen there. So far we have not seen the tariff revenue and the cost of tariffs and the cost of goods pushing prices up. We have not seen a lot of that. We've heard that a lot of producers have actually, ate those increases and it's just eating into the profit margins of a lot of these companies at this point. So we haven't seen it translate to inflation yet, but sometimes inflation data can be delayed. And the market's watching that, right? The bond market's watching that. The smart money is watching that. So as maybe if there were no tariffs, rates would probably be a little bit lower than they are today. And with this unknown of the potential increase in inflation due to the tariffs, I think the market's being a little bit more cautious. Rates are a little bit higher than they otherwise would be.
Have experts adjusted their projections at all for the second half of the year, or we're kind of on the same trajectory as we have been for most of 2025?
Well, I would say I think in some areas they have adjusted their expectations and their forecasts. I would say that the Fed has been talking for a little while now about 2 interest rate decreases in 2025. That language has stayed pretty steady, so that has not changed. And Chairman Powell he's very concerned about what tariffs might do to inflation. So, and he's right to do that, because if you look historically, when the Fed has lowered rates too soon and it's reignited inflation, a lot of times the inflation soars to an even higher level than what it originally was at and what we were originally combating. The last thing you want is another flare up of inflation. It's if you think about the economic impacts that have affected our lives on a daily basis, and you just think of yourself with costs at the grocery store, the cost of real estate, the cost of many goods that you purchase, it's a real right out of your pocket, right on Main Street. You can feel it, and it's painful, and people don't like it. And it can snowball and compound very quickly. So to be really careful to ensure inflation doesn't tick back up is the smart move.
Well, as we see these applications for mortgages and maybe some more refinancing starting to happen a little bit more, good time to remind people, Bill, that are now thinking, okay, let me get back into this a little bit, kind of what to expect from that first initial meeting with you guys across country. Because I know you offer that free consultation, that free 15 to 20 minute mortgage and loan consultation for people that they can take advantage of. So again, a reminder of what to expect in those first conversations and what to have ready.
Yeah. And the first conversation with us is usually exploratory. We're asking a lot of questions. We're trying to learn what are your goals? You're trying to get from A to B. We want to understand what that looks like. And then, we want to try and position you best for whatever you're trying to do and whenever you're trying to do it. So how are we navigating the market? How are we helping you to make the best financial decisions possible?
Again, so you can get in touch with Bill. The information is in the show description. You can check out the links there to get in touch. Also, text the word LEND to 21,000 to go ahead and take advantage of that free 15-minute, 20-minute loan mortgage consultation. And look, as interest begins to creep up, as the mortgage applications begin to increase, now's a great time to sit down with Cross Country Mortgage, figure out what you need to do, where you stand, and what are your best options moving forward. But as things change this summer and beyond, we'll continue to update you right here on the Smart Mortgage Show. This program is for informational purposes only. Please consult a qualified professional before taking any action. Bill Litton is a loan advisor and regional president with Cross Country Mortgage, NMLS number 147060.